Hello everyone, I'm Weijian, and today my research topic is assessing the impact of the derivative instruments on accounting issues and financial reporting in banking institutions. This study aims to assess the impact of derivative instruments on accounting issues and financial reporting practices in banking institutions within the context of Handan, a city in Hebei Province, China. Derivative instruments such as forwards, futures, options, and swaps have become essential tools for risk management and financial performance enhancement in the banking sector. However, their increasing complexity and unique features pose significant challenges for accurate financial reporting and accounting. The research employs a mixed methods approach combining quantitative analysis of financial data from a sample of local banking institutions in Handan with quantitative insights from semi-structured interviews with industry professionals in the region. The study investigates the effects of derivative instruments on key accounting aspects, including valuations, reconciliation, measurement, and disclosure, as well as their implications on financial reporting quality and comparability within the Chinese banking sector. Preliminary findings suggest that derivative instruments contribute to increased complexity in financial reporting and can lead to inconsistencies in accounting practice among Handan banking institutions. The study also highlights the importance of adherence to accounting standards, such as Chinese accounting standards and their alignment with international standards like IFRS 9 and IAS 39 in enhancing transparency and comparability in financial statements. Furthermore, the research identifies potential areas for improvement in accounting standards and regulation guidance to better address the challenges posed by derivative instruments within the regional context. By shedding light on the impact of derivative instruments on accounting issues and financial reporting in Handan banking institutions, this study contributes to the ongoing debate on financial transparency and accounting standards in China. The findings have implications for policymakers, standard sectors, and practitioners in their efforts to improve financial reporting practices, strengthen risk management, and enhance stakeholders' understanding of the complex world of derivative instruments in the region. Derivative instruments, including forwards, futures, options, and swaps, play a vital role in the banking sector as essential tools for managing risk and enhancing financial performance. The use of these instruments has grown significantly, particularly in emerging markets like China, while the financial sector has experienced rapid development and expansion. However, the increasing complexity and unique features of derivative instruments pose significant challenges for accurate financial reporting and accounting practices. In this context, the present study aims to assess the impact of derivative instruments on accounting issues and financial reporting practice in banking institutions with Handan, a city in Hebei Province, China. Using a qualitative research approach through in-depth semi-structured interviews with industry professionals in the region, The study seeks to gain insights into the effects of derivative instruments on key accounting aspects, such as valuation, recognition, measurement, and disclosure, as well as their implications on financial reporting quality and comparability within the Chinese banking sector. The investigation of these issues is particularly timely and relevant given the ongoing debate on financial transparency and accounting standards in China. Adherence to accounting standards such as Chinese accounting standards, their alignment with international standards like IFRS and IAS 39 is crucial for enhancing transparency and comparability in financial statements. This study, therefore, not only contributes to the existing literature on the topic but also provides valuable insights for policymakers, standard setters, and practitioners in their efforts to improve financial reporting practices, strengthen risk management, and enhance stakeholders' understanding of the complex world of derivative instruments in the region. Derivative instruments are financial contracts whose value is derived from an outstanding asset index or rate. And this is the literature review I find, and one is overview of derivative instruments in the banking sector. These instruments play a crucial role in the banking sector, allowing banks to manage risks and enhance financial performance. The main types of derivative instruments are forward futures, options, and swaps. Forward futures are contracts in which parties agree to buy or sell an asset at the preliminary price and on the specific date in the future. Options grant the holders of the right, but not the obligation to buy or sell an underlying asset at a preliminary price before or on the contract's expiration date. Swaps are agreements between two parties to exchange a series of cash flows, such as interest rate payments and currencies, over a special period. Derivative instruments serve several purposes in the banking sector, including hedging risks, speculating on future market movements, and improving financial performance. Banks use derivatives to hedge various risks, such as interest rate risk, foreign exchange risk, and credit risk, which helps them to maintain stable earnings and protect their balance sheet from fluctuations in financial markets. Additionally, banks can use derivatives to speculate on market movements, allowing them to generate profits from changes in asset price or interest rate. Finally, derivative instruments can help banks improve their financial performance, enabling them to better manage their assets and liabilities, optimize their capital structure, and enhance their overall risk return profile. The use of derivative instruments has grown significantly in emerging markets, including China, as financial sectors have experienced rapid development and expansion. The increasing integration of China financial markets with global markets, along with the liberation of its financial sector, has led to a surge in the demand for and use of derivative instruments by Chinese banks. This growth is driven by the need to manage various risks associated with domestic and international financial transactions, as well as the desire to improve financial performance and competitiveness in the increasing global financial landscape. Despite the growth, the use of derivative instruments in China bank sector remains relatively less developed compared to more mature financial markets, which presents both opportunities and challenges for financial reporting and accounting practices in the context of derivative instruments. 2. Financial reporting and accounting challenges posed by derivative instruments. Derivative instruments are inherently complex due to their dependence on underlying assets indices or rates, which can lead to challenges in financial reporting and accounting practices. Valuation of derivatives is often complicated by the need to estimate future cash flows, discount rates, and market conditions, making it difficult for banks to determine the appropriate value of these instruments on their balance sheet. Additional recognition of measurement of derivative instruments may involve subjective judgments, which can introduce inconsistencies in accounting practice among banking institutions. The disclosure of derivative instruments in financial statements also present challenging, as banks must provide transparent and comprehensive information about their risk exposures and risk management strategies related to derivative. This can be a complex task, particularly for banks that engage in a wide range of derivative transactions and have extensive derivative profession. The complexity of derivative instruments can lead to instances in accounting practice among banking institutions, as banks may adopt different approaches to valuation, recognition, measurement, and disclosure of these instruments. This can be particularly prevalent in emerging markets like China, where the use of derivative instruments is growing rapidly, and the accounting and regulation may not be fully developed or harmonized with international standards. The challenges posed by derivative instruments in financial reporting and accounting can be significant implications for the quality and the comparability of financial statements in the banking sector. When banks adopt inconsistent approaches to the valuation, recognition, measurement, and disclosure of derivative instruments, it can lead variance in reported financial results and risk exposures, reducing the comparability of financial statements across institutions and making it difficult for stakeholders to assess the financial health and stability of banks. Furthermore, the complexity of derivative instruments can increase the likelihood of errors and misstatements in financial reporting, potentially undermining the quality and reliability of financial statements. Empirical studies on the impact of derivative instruments on accounting and financial reporting. Several empirical studies have explored the impact of derivative instruments on accounting and financial reporting in emerging markets, including China. For instance, Lee examined the relationship between banks' use of derivatives and financial reporting quality in the Chinese banking sector. The findings suggest that banks with higher derivative usage tend to have lower financial reporting quality, highlighting the potential challenges associated with the valuation, recognition, and disclosure of derivative instruments. Studies conducted in other emerging markets have also explored the impact of derivative instruments on accounting practice and financial reporting quality. In summary, there is a need for further empirical research to better understand the impact of derivative instruments on accounting and financial reporting in emerging markets, particularly in the context of China. This would help address the gaps in the literature and contribute to a more comprehensive understanding of the challenges and opportunities associated with the use of derivative instruments in the banking sector. The role of quantitative research in understanding the impact of derivative instruments on accounting and financial reporting. Qualitative research has become increasingly recognized as a valuable approach for understanding complex accounting phenomena, such as the impact of derivative instruments on accounting and financial reporting. By utilizing methods such as interviews, focus groups, and document analysis, qualitative research can provide rich insights into the subjective experience and perspectives of key stakeholders. Several qualitative studies have been conducted to explore the impact of derivative instruments on accounting and financial reporting. In summary, qualitative research has an important role to play in enhancing our understanding of the impact of derivative instruments on accounting and financial reporting, particularly in the context of emerging markets. By addressing the gaps in the literature and exploring the subjective experience and perspective of key stakeholders, quantitative research can contribute to a more comprehensive understanding of the challenges and opportunities associated with the use of derivative instruments in the banking sector. And the topic, I use the method like research design, data collection, and data analysis, and trustworthiness of the research in my topic. And we find a total of the result is a total of 25 participants of various banking instruments with Handan were engaged in this study. The group comprised of accounting professionals, auditors, regulators, and banking officials with varying level of experience and with derivative instruments. We have collected the key messages from the interviews into a table, details of which can be found in table 1. You can see. And we can find the complexity and uncertainty in valuing derivative instruments as highlighted by point to lead for more standard valuations methods that could facilitate more accurate and constant reporting. This complexity is amplified by the use of intricate models and subjective assumptions, which could introduce significant variability in reported values. The discrepancies in recognized practice of derivative instruments illustrate the ambiguity in the interpretations and application of accounting standards. This lack of consistency could pose challenges for comparability of financial statements across different institutions, underscoring a need for a comprehensive guidance in accounting standards. The concerns about measurement and disclosure, particularly for derivative instruments not traded in active markets, indicate potential issues and transparency and comparability of financial reports. The releases of inputs and assumptions in the absence of observable market practices could result in measurement uncertainty and could potentially impact the reliability of financial statements. The mixed views on the impact of derivative on the quality of financial reporting reflect the dual role of these instruments. While some participants viewed derivatives as tools that can enhance risk management and financial performance, others were apprehensive about the potential negative implications of their complexity and uncertainty on the reliability and usefulness of financial reports. The perceptions and experience of the participants varied according to their roles and levels of expertise. Accounting professionals and auditors focused on the technical challenges such as valuations and regulations, while regulators and banking officials were more concerned about broader implications for financial reporting quality and risk management. The findings suggest that derivative instruments contribute to increased complexity and uncertainty in accounting and financial reporting practice among Handan's banking institutions. The identified themes and score the need for enhanced accounting standards, more transparent valuation methods, and improved disclosure practice to address this challenge. And discussing and concluding. The results from this qualitative study reveal several key challenges posed by derivative instruments to accounting and financial reporting in banking institutions in Handan, China. As identified from the interviews, these include the complexity in valuing derivative instruments, inconsistencies in their recognition practice, difficulties in measurement and disclosure, and the overall impact on financial report quality. And concluding is, this study has shed light on the impact of derivative instruments on accounting issues and financial reporting practice in banking institutions within Handan, China. The findings suggest that despite their significant role in risk management and financial performance enhancement, derivative instruments also contribute to increased complexity and uncertainty in accounting and financial reporting. The study emphasizes the need for improved accounting standards, more transparent valuation methods, and enhanced disclosure practice to address challenges posed by derivative instruments. These improvements could contribute to more reliable and useful financial reports, thereby enhancing financial transparency and accountability. This research has implications of accounting professionals, regulators, and banking officials in their efforts to improve financial reporting practice, strengthen risk management, and enhance stakeholders' understanding of the complex world of derivative instruments. While this study provides valuable insights, it is limited to the context of the Handan province, Handan, China. Further research could expand the geographic scope and explore the issues identified in this study in different contexts and settings. Okay, that's all. Thank you for listening.